Good morning. What's up, guys? How we doing? Happy Thursday. Hope you're having a good one here so far. Now, as we discussed earlier in the week, today and tomorrow are big old news days. Tomorrow we have PCE. We'll talk about that tomorrow. That will hit at 7:30 a.m. Central Time tomorrow. So we'll talk about the aftermath once we come on stream tomorrow. But as far as today, we got at 7:30 U.S. initial jobless claims. There is the opening bell, which came in a little bit high. It came in at 240 versus a forecast of 230. And we also got U.S. GDP quarter over quarter second estimate. That came in at minus 0.2% versus a forecasted minus 0.3%, which is slightly better than expected. A negative number better than expected, believe it or not. Now, as far as Fed speakers, we have Goolsbee speaking at 9:40. This is all Central Time, by the way. At 11 o'clock, we get EIA crude oil inventories, which will not move the market very much, at least if you're trading Nasdaq. If you're trading oil, then pay attention at 11 o'clock. I like to watch at 11 just because if it moves the S&Ps, it will move the Nasdaq, but it usually doesn't move things very much. At noon, White House press secretary is speaking. At 1 o'clock, another Fed speaker. At 3 o'clock, another Fed speaker. Then there's another Fed speaker at 7:25 tonight. So it's kind of packed full, but it's a lot of kind of false alarms as far as actual news headlines. What I'm really looking for today is any random tariff news that we get. I'll keep an eye out for that and let you guys know if we get it, though we'll see it on the chart first. But tomorrow is really the more important news day as far as, okay, let's see if we can shake the market up a little bit, which really we kind of need to occur. Volatility yesterday was low. What's been interesting lately, I don't know about you guys, but I've been trading really well in the afternoon with the low volatility, but it's felt a little weird because it's like the ATR is 9.5, but the price action's so clean. Again, the last couple of days, I've been able to do really well in the afternoon, but the morning has been almost equally. Actually, yesterday, the volatility picked up a little bit in the afternoon. I actually took one small little trade. This is very rare. I took one small little trade in I guess you'd call it Asia, but not really, at like 7 p.m. last night. I was sitting here doing some things, and I had the charts pulled up like I always do, and it was just a beautiful setup. So I put it on, and it was like really small size because I don't trade Asia. But anyway, my point being, the morning has almost been worse in a lot of cases than the afternoon, which has been really interesting. Like yesterday, it almost seemed like at 10 a.m. the volatility was lower than what we had at 2 o'clock, which is very rarely the case. So we'll see if we can get that picking up here today. That opening bar had actually at a 67 range, which is high for recently. What we've been seeing a lot of recently is that opening bar being below 50. Honestly, in the 30s a lot of times, which is really, really low for an opening bar. Okay, but as far as news today, we'll just keep an eye out for random headlines. And then tomorrow, PCE, consumer spending. That's a relatively important news release. And then the final University of Michigan number. This is all tomorrow now, okay? So we'll talk about that tomorrow. And maybe I'll remind you at the end of the stream if I can remember to do so. All right, guys, what's up? How we doing? Good morning. John Marshall, Michael, what's up, guys? Welcome back. Trading Chris, how you doing, brother? Good to see you. Javaz says, let's kick off today strong and focused. Big shout out to Nico for guiding the way. Trust your setup, stay disciplined. Let's catch those NQ moves together. Steven, good morning. How we doing? Tony, Peter, Michael, funded on Apex, and I'm scared of the rules. Don't be scared of the rules, man. With the Apex rules, once you kind of understand what they don't want you to do, it's relatively simple. It's just a matter of discipline to not break them. I honestly, I think that a lot of times, if you don't have some crazy copy trader thing happen, or you don't get caught in, maybe you accidentally don't know the difference between a stop market order and a stop limit order, and you're using a stop limit order for your risk management, and then tariff headlines hit and it skips over you. that I mean, it's your fault because you didn't know the difference, but that one's like a little, you have a valid reason, because I wish they would name those different things, because stop limit orders are really for entries, whereas stop market orders are really meant to be used for risk management, at least most of the time. But Michael, study up on that page on Apex. There's nothing to be afraid of. Just make sure you're using your head. Put yourself in the shoes of an Apex rep. Okay, for example, with that 5-to-1 reward to risk, or risk reward, I suppose in that case, you don't want to be stopping yourself out one tick in the money to save yourself. I'll stop myself at break even, but I'll go one tick in the money, so it's a green trade. That's not a good idea. Put yourself in the shoes of an Apex rep. They're going to see that as a lot of tiny little losers that throw off your reward to risk. Maybe. Josh, good morning. How we doing? Time to play. What's up? Kevin, Scooby-Doo, welcome back, guys. How we doing? Man, these short weeks they always kind of throw me off. It's already Thursday. Feels like we're just getting into the swing. All right, we got 10 seconds left on this 2-minute bar, then we'll roll over into the 8:36 bar. Come 8:40 or so, I'll be ready to start looking to see if there's anything good we can put on. Okay, now listen, as far as market inertia goes, daily chart, bottom of your screen. You need to remember, this is really important, that we're in a range market. Okay. I've seen kind of around the industry in the last week, especially, people just getting burned day after day after day. And I know what they're doing. They're trying to bet on breakouts because that's what's always worked for them. Well, if you're in a range market, that's not going to work very well. Okay, so step one of any trading day is to look at the daily and try to determine what is the market inertia on the daily chart, because this is what everyone's looking at. All right, now you can use the Globex chart. I prefer to just use the New York session because that's what we're trading. But I mean, is it a good idea right now to bet on a 1,000-point upward swing? Probably not. Right? We've been seeing a lot of not nearly as many wicks as we were seeing a couple weeks ago, but we're still seeing breakouts just failing constantly. You know, when you get a big move in one direction, if there's no catalyst, it's a reasonable expectation to assume it's not going to go very far. Now, does that mean if we get a big dump off here, you should just blindly buy? Well, no, because that breaks another rule that you have to pay attention to, which is, well, how are you going to manage risk in a way that makes sense? So, for example, if I just blindly bought here, I could probably make an argument that if I was going to risk 300 points to try to make, 150 back upside, okay, we could probably have that conversation, fine, because, you'd really have to make a push outside of the ATR on the day, the average true range on the day, to stop me out at 300 points. We could have that conversation, but I think that when you're blindly buying a low like this off the open, when it's institutional volume, it's really hard to determine where am I going to put my stop that in a place that isn't arbitrary. You're pretty much putting it somewhere that's arbitrary, which is okay, but it's hard to manage risk and keep it reasonable in a way that makes sense when you're doing that. Okay, now once this develops and it's like, okay, well, it's clearly going to be another range day if that's what we see, which I'm assuming we're probably going to see that occur. It'd be nice if we didn't, but we'll see if that occurs. Then you could make that argument. It's like, okay, well, we're pushing into low of day. I'm just going to buy for a swing back up and I'll risk, 30 or 40 points. That makes sense. Me, I prefer to have something concrete as far as risk if I can help it. Okay, so what I mean by that is, in a range market that's seeing an attempt at a breakout that's currently kind of succeeding like this, it's probably going to fail, okay? But let's assume that this bear breakout were to succeed right now. Well, you're guessing on your risk management as far as how far is it going to go before it reverses. We all know it's very likely to reverse. Look at the market inertia, right? Range day. Day after day after day after day. Range day, range day, range day. But do you really want to risk 200 points? Probably not. Okay, so buying lows like this can make sense if you can risk enough. But in the prop space, a lot of times you can't really justify risking enough. And if you are like, well, that's the way I trade, that's the way I want to trade, okay, fine. What I would say to that is make sure you're trading really, really small so that you can risk enough. And I mean like 1 micro. Because you can make enough if you get a swing back up with 1 micro. It's not a big deal. But, you know, if you're trading 1 NQ contract, 1 E-mini, how are you going to justify risking 100, 200 points on a 50K Apex account? Like that, the math ain't adding up. So you gotta think about these things. The futures market, I think the best way to put it is based on the context of what's been going on, the market inertia. Does what I'm doing make sense? Simplest way to put it. Because that's the reality here. Okay, so I would expect at some point here we're going to try to get a bull reversal. We'll see if they can succeed, or if the bears, if this happens to be one of the 10 to 20% of breakouts that are going to succeed and turn into a trend day. That would actually be fantastic, because then we could trade a trend day, which we haven't been able to do in feels like months now. But heading into today, that entire long rant started with me wanting to say scalp mentality coming into today, until the market tells me, hey, you're clearly wrong, it's time to trade a trend. In which case I'll do so. All right, we are slowly getting into 840 territory, heading toward 845. That big volatility bar, relatively short-lived, but we're not getting a ton of overlap on these bars, which is good to see here. Bears trying to take this thing lower, break it out. We'll see if they can. But the range has been falling. I mean, that last bar was 21 shortly after the open. That's pretty low. But we'll see if that ATR can creep up above 25. There it is, and stay there. And that ATR, I'm looking at that like blue tealish flag at the bottom of your screen. Bigfoot, what's up, brother? Good morning. Lee says, Nico, when I do my daily market check to mark my levels and to set my bias, I usually look at the daily going off the last 7 days. Is that a large enough sample size for bias? Well, Lee, I'll answer it the way that I trade. Coming into each day, I have a bias, but it is a volatility bias. I have zero directional bias coming into each day. I don't care at all. I don't care if the market crashes. Great. Hopefully we can make some money and then buy more. Transfer it out and buy more of the S&P. If it pumps, fine. I do not care. I don't want to have a bias. I think having a directional bias hurts you because you're unable to really have the flow. However, you're asking about sample size for bias. So yeah, I'd say 7 days is enough. I prefer to look at more like 10. I really don't think it matters that much. 10 just makes sense to me. But I mean, realistically, when I'm looking at like the daily, like here, bottom of your screen again, I'm kind of just, I'm not counting bars, right? I'm just kind of looking at this. Like, okay, what's it been doing lately? And then if all of a sudden we clearly broke out into a trend, I'd be looking at those bars and say, okay, well, these more recent bars are more meaningful than this. So maybe we're breaking out into a trend. And on the 6th day of trending to the upside, it's like, we're clearly in a trend market. Don't go against it. Chris K, good morning, my man. How we doing? But yes, coming into each day, I have a bias. Again, not directional though. My bias is going to be, hey, realistically, if we see a big attempt at a bear breakout or a bull breakout, is it going to go very far? If it's a trend day, yeah, you probably shouldn't be trying to, enter pullbacks with stop orders on a big bull trend. You probably shouldn't be trying to sell below bear bars. Doesn't make a lot of sense to do that. Because what is that? That's a little dip that every bull in the world is going to be looking to gobble up. Probably doesn't make too much sense. Or if you're in a range market, it's like, well, should I really be selling the rollover of this bear bar right now? Maybe it'll work, but the probability's not there. If it works, it's kind of a lucky bear breakout that I caught. So listen, probability, that's all I care about. Is the probability increased that trends are going to work? Right now, the answer is no. Right now, the probabilities are the breakouts are going to fail. All right, we're in 845 territory, so it has been for a few minutes. Time to start looking for something to put on here. But I know that the bulls are going to try to step in here. So I want to see them do so. And then a setup will come right and fall in our lap. TC, how we doing? Lee, to be honest, my bias has been we will never... will we ever break that flat top on the daily? Yes, so if you guys don't know what Lee's talking about here, this is a pain. This flat top here between 450 and 550, it's a big range. It's never going to be an exact dollar amount or point amount, I guess. But that flat top has really been a pain, okay? And we're kind of right up against it. So I would love to see, you know, we did try to break it, but I would love to see if we could just bust through there. Or you know what, if we crash and fade back down, sure, we'll have to deal with it again in the future, but we get the added benefit of the bearish volatility increase. So either way is a win as long as we pick a direction and go. What we don't want is to hang around that flat top all day, but even if we do, we'll find some trades. It's not that big of a deal. Superfly! Van, how we doing? Brandon, good morning, brother. How you doing? All right, we're coming into getting close to 21.5. So that's going to be a tier 2 level. So I'm looking at it. I think people are thinking about 21.5, but it's not the end of the world. Right now, given the context of the market, it strikes me that the bulls are trying to find any reason at all to buy, which is going to add some pressure in this down move. But obviously, the down move has been very strong for the last 15 minutes, 10, well, 20, really. What's up, Gaines? How we doing? Oh, I completely forgot. By the way, good news. I added, I think, 5 funded Apex accounts yesterday. I was in the zone yesterday afternoon, man. I was trading the main accounts, I was trading evals, and I added 5, but I woke up this morning to a message. This got extended by a couple of days, and believe it or not, it's actually a little bit better now for the next 3 days. It's still, if you use code BIG, 90% off single day pass. Now, single day pass doesn't mean you have to pass in one day. I've noticed that I've been getting some questions about that. I think people are confused on the verbiage. No, it just means if you want to, you can pass in one day. But the 90% off the last few days was 90% off, and then if you take longer than a month to pass the eval, which I don't, but if you do, I don't like to, I should say. It's not like, oh, I never take that long. No, it's like I just wouldn't let it take that long because opportunity cost. It would renew at 50% off, but they changed it. It's now 90% off up front, and when it renews, if it renews, it's 80% off. So it's actually technically better now for the next 3 days, but good news, they did extend it if you're like, damn, I missed the deal. There you go. If you're looking to add some more and wanted to take it day by day, there you go. Tech, watched all your replays, first time watching you live trade, good morning. Good to have you, brother, how we doing? Mike, my man, welcome. Right now we're waiting for those bulls to step in, at least try to, which they currently are. Not that they're gonna have some big reversal necessarily guaranteed. The probability of that occurring is actually, at this point, I'd say about 50-50. But we know they're gonna try to step in because you look at the daily chart, that's a range market. Right. The bears, no matter how strong they are, relatively low probability that they're going to get away with just a big trend day to the downside out of nowhere with not really, I mean, you know, there's some catalysts from this morning, from yesterday, NVIDIA, but I don't know, man, for the bulls to allow a giant bear trend day today in a range market is improbable. Not impossible, it's improbable. But here we go. In a little bit of an attempt at a bull reversal. No, this is probably a good learning experience. This is, if you wanted to be aggressive, you guys see how this 2-minute bar closed? It covered the entirety of the previous bear bar and closed outside of the wick high. If you wanted to be aggressive, you could actually buy that rollover and scalp out. But you should understand that the probability here right now is, at least the way that I would understand it, which is going to be different for everybody a little bit, but you should have similar ideas. I mean, is it really likely that after this, we get this? I mean, I would say the probability is lower than 50% that we get that. It's much more likely that we get a push up and then either we go flat or fade. Okay, so now the question is, well, how far up? That's the question, we don't know. I'm keeping an eye on that 50% retracement zone, but really all I care about here is good setups. When we get a good setup, put it on, and don't try to, well, I guess all we're really trying to do is predict the next move, but don't get caught up in the game of like this is a really, I think Wall Street Bets is kind of, in a way, responsible for this mentality because everything on there is extremely directional. But don't try to play the game of like, all right, this is the reversal. I'm going to buy now and we're going to reverse back up to 21,008. It's like, well, okay, but why are we going to do that? Is there a catalyst? Are you just betting that the bears here all went home, they all made their money and left? Like, why are you so confident that that's going to occur? Because the reality is the probability of that happening is not 0, but it's relatively low. It's never going to be as low as like 0.5%, but it's lower than 50 for sure, by quite a bit. So you have to try to understand, like, what are you actually, like, realistically, what's the probability of your bet playing out based on the price action, right? So you see that shrinking bull bar there. Now this bar becomes very important, how this one closes. Five-minute 20 EMA, which has been known to cause a slight hang up here and there, is currently at 619. So it's not immediately kind of in the way, but we'll see if that comes into play here soon. So, by the way, here's my current account roster. I'm getting to the point, I don't know, I think right now I have like 15 Apex funded accounts. I'm getting to the point where, I really trust the trade copier from Affordable Indicators, but I'm starting to wonder, all right, we're scaling horizontally. We'll be maxed out on Apex, give or take. Well, I guess, or take. Maybe I should be starting the trading in groups process to hedge against, God, I don't even want to put this out there. In the past, I've had issues with some trade copiers where they just go nuts and cost you a ton of money in activation fees and whatever you paid for the eval. That would really be the only reason I would care to trade them in groups, would be to hedge against any potential issues with the copy trader. Though, to be fair, I have not really had any problems with the Affordable Indicators copier. You know what's really been frustrating to me is that, if you guys know of a way to do this, by the way, please let me know in the chat. It would be extraordinarily helpful. But between the Affordable Indicators copy trader and Ninja Trader and Rhythmic and Tradeovate, is there no way to set a max position size that cannot be broken? And I don't mean because I don't trust myself, I'm gonna average in and get a huge position then blow. No. I mean, in case the copy trader goes awry, can I set an absolute max position size on my leader account so I don't end up with 100 micros in all my accounts, meaning to trade 4? You know what I mean? So I have looked all around. I've found other people that are like, this is insane that you can't do this. It's almost like they want you to blow the accounts. I can't find a way. Which is ridiculous, because like with Lightspeed, for example, a broker more geared toward stock and I suppose options, all I have to do is call my rep and say, hey, set a max position size on my account. They're like, okay, yep, done. Hang up the phone, that's it. It's bizarre. It's like these, I can't even say like decades behind as far as the technology, because this has been a feature since online trading was a thing. All right, you guys see this? What did we talk about? Big downside move, attempt at a pop, fade back. Very, very common. Very common to see that. The question is, where does the curl occur, right? Because we really only have one touch point to go off of. All right, now the ultimate question here. By the way, the Nasdaq's down minus 0.1%. So we're not far from that break-even point, which we know has been known to be a magnet lately. Market just cannot seem to make a decision around break-even. But right now the question is, do we take out that low, this pivot point here that we saw, where the bulls tried to make something happen and then got faded like we talked about? Or does this turn into a little ascending reversion channel? That's the question right now. Now, it would be a relatively mellow channel if it turned into one. But if we break this low, that changes the story, because now we're looking at maybe a flatten out or descending channel. So taking a short here would be a bet against the ascending channel forming. Michael says, so with the 5-to-1 risk to reward, this is with Apex he's talking about, can you explain how the taking profit early messes you up? I get it, but for some reason my brain is confused about why that's bad. So Apex has a rule that they don't want you at least consistently risking more than 5x your average reward. Now, it's not really clear how they determine that. Like, there's no math equation. There's no sample size that they're like, hey, this is the sample size we go off of. I think what they really do is they look for repeat offenders in the data when they're looking to give or deny your payout. So, Michael, think about it. If you're risking 20 points, but you're a trader who likes to stop yourself out at break even, a lot of people stop themselves out at break even plus 1 tick. And if you get good fills, a lot of those trades are going to look like 1 tick winners with live stop orders out at 20 points. That's way worse than 5-to-1 risk reward. And if the rep chooses to not understand what you're doing, even though it's clearly obvious what you're doing, then that's out of your control. And they would have every right to say, nope, you're scalping for 1 tick. And you'll say, no, those are just break-even stop-outs. They're like, sorry, man. Don't give them any reason to deny your payout if you can help it. All right, ATR is sitting at 30, which is pretty damn good. All right, you're gonna see those stops get taken out. Very common. That was good for 20-point push. Good. Okay, now as we watch this develop, it would not surprise me at all if this turns into that descending channel we were just talking about. Now, the reason I'm not going to sell this rollover is because I imagine that we're eventually going to see a bounce here. I could be wrong. And it could just dump off and I'd miss that opportunity. But to me, I don't look at this as an opportunity because, again, range, market, big bear move off the open, bounce, push downside. I imagine we're going to see this turn into a descending channel rather than just a fall off the cliff bear trend, which means that at some point here, just based on kind of like the psychological angle of this, right, I'd imagine the bulls are going to try to step in at some point. And if they're able to do so, then I want to short pops. Bear's doing a pretty damn good job here. Right. Okay, let's see when we get that little attempt at a bounce. This has actually been a very interesting morning so far. I mean, since the open, we've moved, what, 260 points? Really a hell of a move compared to what we've seen lately. But again, you look at the daily, and I mean, really the body is relatively small here. But here you go, here's your little bull attempt at a reversal. Now, again, they're fighting strong bears. But they're gonna try. Hang on. All right, we're back. We're back. Oh, listen, guys, this is the kind of move that can kill you. If you blindly try to buy the bottom, for example, you're like, okay, well, yeah, let me just buy the bottom of this bar without a stop. That makes sense, right? And I'll scalp out, well, you know, you get a harder push. It's really, really hard because this here can turn into a channel with this angle, or it can continue this angle. And that's a difference of 80 points. Okay, so this is where you go counter trend. You start having to average in, but it turns into a trend day and you don't have any kind of idea where you're going to stop out. This right here is the reason for a lot of even intermediate traders blowing accounts, but especially beginners. Corey, what's up? How you doing? Oh, Abdul. Yeah, man, gotta be careful. Gotta be careful. That's why context is so crucial, because going like in a range day, I wouldn't even call it really going counter trend because there isn't really a trend. However, today is the first day we've seen in genuinely in weeks where a directional trend has sustained with this many points for this long into the day. Obviously, we're only like less than 45 minutes into the day, but we'll see if the bears can turn this into something or if we end up just like curling back. In the meantime here, now that we're settling down in the hole, I'm looking for scalps. ATR is 33, which is good. Range on that last bar, 40. Well, Josh, I wouldn't call it a channel yet. There's not enough touch points. But listen, guys, for me, I'm just trading price action, okay? Trade your own way. Don't necessarily do what I do, but I'm just doing what I do. So if we get, I'm thinking if we get a nice confirmation close of this bull bar above that previous wick high from 2 bars ago, I'd be looking to maybe scalp with risk. That would put my risk just below the curl. And if we get an early rejection, that's fine. Then I get stopped and it doesn't work. But that's the game, right? I mean, a lot of times the trades aren't going to work. It just matters over a year. Well, over a month. Are you agreed? Does the data work? Oh, we got 30 seconds left here. But I gotta tell you, my favorite idea right now is to short this channel, like you said, Josh, if we can really develop the channel. Yeah, nothing yet. Yeah, I gotta let this bar develop here. Bit of a wick back on that last bar, kind of in the last 10-15 seconds. As far as this little channel, honestly, right now, this is how I would draw it. I just think that's the most obvious. It doesn't have to be perfect. It can be a little sloppy, but that gives us 3 touch points and is, I think, the most psychologically relevant. You could also draw it like this, obviously, just using these 2 touch points, but that's a little bit more extreme. And given the option, I prefer to take the less extreme channel. I think it gives just a slightly better entry. And this is clearly a descending little channel. At least it's trying to be. And if you draw the too aggressive trend line, you're in earlier, which decreases the probability. Okay, and I mean, you could argue that it does decrease the risk a little bit because the higher you go, if you break out, you're getting closer to a breakout. But I would also argue, I mean, you're in a range day to begin with. I would argue that that not only decreases the risk because you can cut it at a more definitive point, but it also increases probability because you're pulling away harder from this kind of mean in the middle of this channel that's clearly being developed. So I prefer to take the calmer trend line when possible. Comes the rollover of this 2 minute. That's wicking back up into a doji. I mean, the obvious way to draw this would be like this, okay? But in a lot of ways, I'm almost looking at this. Because if we do break downside there, then I'm thinking, okay, maybe we are entering a little bit of a trend here. And our mentality of range day might finally, which is a good thing, be getting a little bit broken. If we make a pull back upside and test this, then I'm very interested in just shorting this. The less able we are, by the way, to break this, the less willing I am to sell closes of bear bars for continuation. Kind of like stop order or market order scalping. And the more I'm interested in limit order scalping, which is more channel scalping, rather than continuation, right? So that little trend line on the bottom means a lot to me. What we decided to do around it, that is. You just see how the wicks are increasing on both sides, but in the last 3 bars on the downside, we're getting more and more wicks. I mean, in comparison, what does that kind of tell us, right? Either we're looking at a repeat of this scenario, though this was, I would argue, stronger than this. Right, this is more of a sideways trading range. With these wicks, the bulls are trying to prop it up. Now, if they leave and we break through, all of a sudden I'm looking and saying, like I said, okay, you know, maybe we are seeing maybe more of a trend day, at least a range market trend day. That makes sense. Right now, the bulls aren't going to let that go without a fight. Jared says, hey Nico, just wanted to thank you. I've tuned in for a while now, and some of what you've been saying is finally sinking in. Made my thesis this morning, traded, no broken rules, best day yet. Awesome, brother. Good to hear it. Be like Jared. Write your business plan. Figure out what your, what kind of your process is mentally when you're looking at a chart. If you don't know what I mean by that, for me, what I mean is, all right, what's the context? What's the inertia of the market? Okay, now inside of there, next, what are we kind of doing so far today? Then next, what's the relationship between the buyers and sellers? We're heavily weighted on the most recent data. That's it. Okay, so as we come into a retest of this trend line here, you could say, well, hang on. It looks like we're maybe in the early stages of a bull continuation setup, but remember context, we're not in a trend, at least a bull trend market. So what I'm looking at here is to decrease risk of breakout on the trade, if we can get a nice test and then just a single entry bear bar. Again, the more you gear towards scalping rather than like a slightly longer duration intraday swing where you might reasonably expect the trade to take 30 minutes. If you're scalping where ideally the trades would be quicker, it makes sense to take slightly less edge, increase the trade sample size, which means you can get away with less confirmation bars. And I think you should get away with less confirmation bars. But in a lot of trading ranges, I would short the test. In this trading range, since it's wider and the swing up is a little more aggressive, if we can get a test and then a bear confirmation bar, I'll sell the rollover of the bear confirmation bar. It doesn't have to be big. I just basically want to see a reasonably sized bear bar, probably similar to those 3 bull bars we just saw, if not a little smaller, closing near its low, and then I would sell with a stop order as close to a tick below it as I can set the order. All right, there's the retest. Got 38 seconds left here on this 2-minute bar. All right, so I will get ready just in case. Ten seconds. That's going to hold on to being a bull bar. It's not what I'm after here. Let's watch this bar now. I would love to see this bar close near its low as a bear bar. For my current idea, that would be the entry for me. I'd put out a stop limit sell just below the close. Well, just below the low of the bar, I should say. Got a minute 17 to see if the bears can pull that off. Otherwise, if the bulls just break out of this little channel and take it back higher, then we know. Okay, range day again. That bear continuation was short-lived. Come on, bears, do it. Bulls are gonna do it. Okay. Okay, time to make an adjustment here on our little trend line. Let's see, does it still make sense anywhere, really? I mean, you could make this argument, right? I'll leave it there for now. I still have the same idea here, by the way, on this bar. Abdul, yes, no complaints today out of me about volatility. I'm happy with the volatility here today. I just got to find my setup and slap it on. Or a setup, I suppose. All right, 35 seconds left here to see if we can slap out an order. There we go. And we are sitting short, so we are in. We got a fill there. Beautiful. I'm going to leave that as is. Good setup. We'll see if that works out. I'm happy with that. My job's done. Put it on. Let it do what it's going to do. The hard part's finding a setup that you're happy with. Once it's on, my stop is just above that signal bar, which is perfect. My take profit is before the low of this channel, which is beautiful. Perfect. So we'll let it sit and see what it can do. Sitting about 5 points in the money right now. All right, there's a doji here, and Bull's trying to pop it. My stop's at 477 and a quarter. Take profit down at 397 and a quarter. Here's another, not quite a test of that trend line again. Getting closer to it. See, this is good because if we take this out here, that tells us, that gives us more information, right? So the trade, if we take this out, pop through, it would stop us, but it would give us more information about future, I guess, price action, right? We'd kind of be looking more like, okay, well, are we entering a little ascending channel? I mean, you got to look at it that way, guys. When you lose a trade, I mean, I get it. It's hard, but you can't look at it as, wow, I was wrong. I lost a trade. It's like, no. I have updated information now. Yeah, sure, I was wrong, but now I can use that information. The trade's done, right, in that case. And then you can use that information to make better decisions. At least try to make better decisions based on the updated information. The bulls are trying. They're kind of testing that trend line right now. Right here around 58, 59. All right, bulls are trying. Here comes the test of that little flat top. If they pop through, it will stop us. Stops at 77 and a quarter. I imagine the bulls are going to at least want to see that get tested. See if they can. It's close. We're currently sitting about 11 points, 9 points, 10 points in the red on the trade. Bears can follow through on that previous bear bar. There's a decent close out of the bears. Let's see if they can turn this little flat bottom into a break. Since we entered, I'd say we're maybe developing a slight flat bottom. I don't hate that. I really don't mind it because you know some stops get developed. The longer you hold it a level like a flat bottom, flat top, the more stops develop. Oh, back to green on the trade, break even-ish. Well, I gotta tell you, I'll be a lot happier with this position if we can break this little downside wick. 430. If we can break through 430, I'll be a little bit happier about it. Bulls are trying to defend it. This whole region, kind of like this 8-point region, is a little flat bottom. At least turning into one. Which you guys know how I feel about flat bottoms and flat tops. Hey Mark, how we doing? ATR is dipping back below 30 now. It's at 28.5, which is, by the way, still plenty high. Above 25, I'm totally cool with. I can just trade normally. Below 25, I start thinking about, okay, well, let's lean a little heavier into negative reward to risk. And below 10, it has to be a special occurrence for me to even be trading. Yesterday, we saw a little bit below 10 in the afternoon, but the price action was very clean. So I traded very well. Normally, when ATR is below 10, it's time for me to leave. But we're at about 28 right now, which is good. Yeah, bull's coming back up for a retest of that little flat top. Turning into kind of a horizontal little channel. Ooh, that might be the dagger, that nice little bull close. We'll see if they can pop it up through 77. I don't have a reason right now to manage early in either direction. To the bull side, nearing my stop. Managing early right now, again, when I entered the trade, everything was very, very well thought out. Everything was exactly where I wanted it to be. The stop, the take profit. So you just gotta let it do its thing. But if we pop through 77 here, just a few more points, that'll hit us out. But at this point, man, this sideways channel, flat top, flat bottom, this isn't good for anybody. So a break in either direction, I'm pretty much cool with at this point. Though I'd like the trade to work out, but just one. Interesting movement here around this little flat top. The bulls are going to try to break this, I would imagine. Probabilities say they are. They are really having trouble. This has turned into kind of a bizarre trade. There we go. And we are flat. Okay. All right, let's move on. So, honestly, after that, I'd love to see the bulls just, at least somebody, push this in one direction or the other, because that turned into a weird flat, horizontal, flat bottom, flat top channel. And those things can, like, I mean, I've said this a million times, they can kill you. Because the longer they last, eventually it gets to a point where probability of breaking one way or the other eventually turns, we're not there yet, but eventually it turns just straight up 50-50. And you can't really scalp the channel. You can't really bet on breakouts. There's just nothing to do in a flat channel like that. So, all right, let's move on, see what we can get. Okay, ATR is at 25, so it's starting to dip. As long as we can maintain some kind of price action here and not like sideways action like we kind of just saw that turn into, I'm cool with it. Party Homes, where were you when I was in the trade, man? Where's Quicksilver when you need him, by the way? Where the hell is that boy at? Where's he at? Probably long off 380. Happy to have you, Party Homes. All right, finally you're getting some volatility. That's good to see. That's what you need right now. Now, I really don't mean to complain about it, because volatility today has been very good. And then it died for the last about 15 minutes. 20 minutes. So let's see if it can return here. Here's a test of 21.5, by the way, which is also, interestingly, the 5-minute 20 EMA. So we may see a few bears step in here, at least try to step in. Doesn't mean that they're going to succeed at it. Also, we got to think about that 50% retracement region, right? So you're kind of looking in this region here. Why does that matter? Because you have averaging in bulls who start taking profits at break even. Actually, I shouldn't say taking profits. They start selling at break even. All right, I'll be right back. I gotta grab some coffee. Let's see what happens around this 5-minute 20 EMA upper left. Something crazy happens. Scream, shout, yell in the chat. Back in 2. All right. Well, we're getting closer and closer to that 50% retracement if you look at the 5-minute upper left. Taz says, I've been long, getting my behind handed to me. Well, you might be one of those 50% retracement bulls that we have to worry about, huh? I mean, again, it's really common. When you get a big push off the open, and then a retracement, you have bulls averaging in the whole way. And then, on average, their average is going to be somewhere in the middle. So when you approach the middle, what do you get? You get thankful bulls that they can get out at break even, adding selling pressure. Sometimes it's enough to get a rejection. Other times it'll just hang up for a second and then continue. You know, today's one of those days, man. You gotta, please make sure you're cutting those losers, okay? I mean, I cut that one trade at 77 something, maybe 77 and a quarter. If you get in the habit, you're like, well, let me just move it, then move it again. Let me just take it off because we're gonna fade. You know, we're in a big bear trend. Are we? First of all, it's a range market. Second of all, now the loss is more than double. At least at one point it was what it needed to be. Today is not the day to be holding and praying. Yeah, I'm live. Party Homes, I'm live every morning, man. 8:15 a.m. Central until minimum 11. Here we go. Bear's trying to reverse this thing down. Let's see if this turns into a reversal or just a little pullback in a overarching bull trend. Been a couple of months, I think. I think it's been a little over 2 months now since we started live every single day. Lee, man, moving stop losses and trying to dollar cost average in to help losing trades was the hardest habit I ever had to break. Yeah, listen, I don't like to... If you guys have learned anything at all from hanging out here, what I hope you've learned is that the word in trading is context. So I cannot sit here and say it would never, ever, ever make sense to dollar cost average into a trade, and you can't do it, and you can't make money, and it's a losing strategy, because that's not true. I'd be lying to your ass, and I refuse to do that. So the truth is, in some market conditions, if it's clearly a range day, and if you're an expert professional trader who's been at it for 25 years, sure, you can absolutely average into trades if you have a point where it's like, okay, it's time to cut it because I'm wrong. And there can absolutely be edge in doing so if you're doing it in a range market. But the big problem is most people have a lot of trouble determining, hey, is today more of a range day or could this be a trend? And a lot of people, when they end up getting hurt, because you don't hear from the people dollar cost averaging in when it's a range market because it works. But the trend day comes. And then the water goes out. What's the phrase? Warren Buffett always said when the tide goes out, you can see who's swimming naked. And they all come out of the woodwork and say, man, I blew up today. Well, yeah, it was a trend day. The second you realize, hey, this might be a trend, you gotta stop dollar cost averaging in. But the truth is, for beginners especially, and even intermediates, and even some advanced trading, I don't think it's a good idea to dollar cost average in, not because you can't make money, but because it's not worth it. It's just not worth the risk, because I don't think, and this isn't your fault, by the way, you just don't have the screen time. I think most traders don't have the screen time to make good decisions when it comes to dollar cost averaging in. It's just easier to not do it. You will make less money in the early days if you try to dollar cost average in. And think about it. Why are you doing that? To protect your psychology because you don't like losing. I've said it a million times. I'll say it again. It's a lot easier to take 1 or 2 or 3 paper cuts than it is to get hacked in half with a dull axe, which is what happens when you dollar cost average in and you catch a trend. Just cut it, take the paper cut, move on. You can heal from that very quickly. You're not coming back from getting hacked in half, at least in some cases. Yeah, Mark, it forms some bad habits. Yeah, Lee, listen, and the reason I say it can be done and you can make money doing it is because that's the truth. Something that's really important to me is to not say things trying to protect people from themselves when I know them to not necessarily be true. I don't know, what's a good example? I mean, if we just relate it to trading itself, a good example would be like in the early days, I don't know about you guys, but basically everybody, including immediate family, everybody except for my now wife, for good reason. If I told them, hey, I'm kind of looking at like day trading, I literally would get sent an article. Hey, don't do that. Here's why you shouldn't do that. 97% of day traders lose money. Okay, well, as an immediate family member, you'd think that maybe you could be the 3%, but there's no faith. So I'm sure a lot of you guys have had that same occurrence. But that would be like me sitting here saying, don't day trade because you're just going to lose all your money. No, you can lose all your money. But if people make it work, why would I say that? That's a lie. That's me trying to play some weird role and try to protect you from yourself, which I fucking hate. I can't stand when people try to protect people from themselves. Which is why, by the way, I'm so passionately against the damn PDT rule. Don't get me started on it. But I can tell you what I think is the right way to go about it, and dollar cost averaging in, especially in the early years, is I don't think a good decision. I think you'll make more money if you don't do it. Lee, you watch your mouth, dude. Hey, man, some rumors are true, man. You'll never know. Hi, Nico. Good morning. I'm currently battling to keep my size small and not dollar cost average. I was ready for a payout in overnight session, made 205 days. Cool. Today I decided to keep trading. I lost 130 bucks staying patient. Hey, Peter, did you dollar cost averaged in today? Hey, Michael, the answer to that is persistence. That's the truth. Man, it's unfortunate. I've seen so many. I've only been making videos online for, well, for trading for under 4.5 years, since January 2021, and the amount of people, I gotta tell you guys, it's sad that I've seen come and go is really unfortunate, because the whole thing that I want here is more of us, more retail traders that are actually doing the thing, because like there's not that many that are actually doing it, at least that you'll ever hear of. It'll get more people will come out of the woodwork and be like, yeah, maybe I should start talking online, because we need more of this. But the 3%, the difference of the people who make this work, literally, you don't have to be smarter than everybody else. You really don't, because trading, you should just try to stay dumb as long as possible until the market proves you're wrong. You don't have to be some genius at all. But you can't stop. If you stop 2 years in, you're an infant still, and you're like, I've been at this 2 years, it's time to just quit. This is not one of those things. I mean, listen, I promise you, unless you're just doing the same thing over and over and you never stop and think and look yourself in the mirror and say, I gotta stop making these same mistakes. If you try this for 30 years and you don't eventually make it work, I would be shocked. But that being said, you have to try to improve each day and try to break bad habits, and it's not easy, it's hard. But the reason I say that is because if you're at it for, 10, 20, 30 years, a lot of people I've seen try it for 10 years and can't make it work, and eventually they do because they just never stopped because they were stubborn. But if you were at it for 30 years and you still weren't making it work, you would have gone broke 25 years ago, right? So you're forced, the people who try that long are forced to make better decisions. All right, let's see if we can get a nice little bear reversal here, or if this turns into an ascending channel. That's what I'm interested in finding out right now. And those decisions, when I say make better decisions, by the way, I don't mean like just stop losing trades, because that's part of the game. You're gonna lose trades 100%. The better decision would be, okay, I understand I'm gonna lose trades. There's a certain probability I'm gonna lose 6 in a row. It's gonna happen someday. I've heard crazy streaks of profitable traders who lose 27 trades in a row, right? Like, it's gonna happen. You're gonna have crazy losing streaks where you're like, man, did I lose my edge? What's going on? Nope, statistical anomaly. So the better decision would be to understand that and trade small. Trade small for you. Okay, now eventually trading small for you might be 100 NQ contracts. That's kind of the goal, right? Yeah, Peter, so if you didn't dollar cost average today, good. However, what you just described happens to a ton of people. It's very common. Very, very common. By the way, I'm looking at this 2-minute here to see, okay, does this break lower? In which case I would take continuation to try to get down near those lows, or do we bounce here and get a nice bull bounce? In which case, okay, range, ascending channel, right? That's what we're thinking about right now. Yeah, but Peter, it's going to work in range markets. That's the problem, is that it does work in range markets, but the people who get hurt on trend days usually have a really hard time or are too late to determine that, hey, like this might be a trend day. Because I don't think they've watched enough charts, that they're not thinking about price action for top of mind, which, I mean, it needs to be, because that's the most real thing we can possibly look at is price action. There you go, Chris. Whatever works for you, brother. Vinny, Nico, how do you feel about live replay backtesting, or essentially live paper trading for confirming strategic edge? Yeah, listen, if it's a weekend and you're like, I got nothing to do, hop in and do some replay trading. Pick a random day. Don't look at the chart beforehand. Cheater. And just trade it. Go back 6 months. Trade a random day. Sit there all day. Trade the day. See how you do. Now, don't just randomly buy and sell. You're wasting your time. You have to have some kind of strategy, right? Try to find, okay, I'm going to do, if it's a range day, I'll trade, limit order scalps. Hey, if this ends up being a trend day, because I didn't look at the chart, I don't know which one it's going to be, I'll take some continuation scalps. But that's a great way to spend, 2, 4, 6 hours on a Saturday if you're bored and have nothing better to do, which, I mean, this is important. You got to figure it out, right? I think it's great. But nothing beats, Vinny, forward testing and trading for real with 1 micro. Nothing beats it. The risk will never be too big. You're not going to go broke trading 1 micro, hopefully. And you can learn. There's real money on the line. You get cut for real. You'll lose $20, $40, $80. But there's also something on the line. So when you make money, you're rewarded for doing the right thing. Assuming you're not dollar cost averaging in on range days and then getting stuck on a trend day. Damn right, Mark. You can make a lot trading micros. There's a lot of money to be made in micros, especially if you're scaling horizontally. Been at this for 12 years, bounced around different strategies, finally have a good one. Hardest part is to stay within the set of rules. Yeah, but once you have the data that shows, hey, when I do the right thing, I make money, it becomes a lot easier. You stop wanting to break rules because you know that breaking rules puts you back where you were. And being where you were is not fun. Peter, would you still recommend... I'm sorry, Clark, would you still recommend options? 100%. 100%. But when I say that, I know a lot of people are like, hey, all right, let's go buy some short-dated calls. No, that's not what I mean. I'm a big fan of net sell option strategies. Running the wheel, selling calls, selling puts, net sell spreads. Now, I don't mean being short the market necessarily, you could be, but I mean net sell in terms of the option strategy itself, whether it has a slight long bias, a slight short bias. 100%. 100%. Those strategies, not buying options, but net sell option strategies, that was the first strategy that let me do this full time. To cover both my now wife at the time. Sorry, cover my now wife and me back before we were married. That was it. It's a great strategy if you can understand the Greeks. If you don't know the Greeks, you're not going to do well. Well, listen, this is a conversation that you need to understand that we really should only need to have one time. A market needs to have 2 sides for it to work, obviously, right? Elementary. But how do you make a market with short-dated options? How do you get someone to sell you a call that expires tomorrow that you could put $80 into and make, theoretically, $250,000? Why would anyone sell that to you? They wouldn't, unless their probability of winning was extraordinarily high. Think about it, right? Like the state lottery. Why would they sell you a ticket for $1 that you could potentially make $1 million? Why would they sell that to you? That's horrible. Reward to risk. Horrible. Because their probability of keeping your $1 is extremely high. Okay, that's the same. You have to create a market by making it way more attractive for the sellers the shorter dated and more out of the money you go. Otherwise, no one would sell it to you. When you buy it, someone sold it to you. An institution, a person, someone. It was out there. When you start to realize that, I think you start to see the probability for what it really is. Otherwise, how would you even have been able to buy the thing? They're providing you massive leverage. You're giving them huge, huge probability. Kings, Nico on take profit eval. Do you have to trade 5 days in a row to pass for the consistency rule? I think it's just 5 days total. I don't know if they have to be in a row. I think it's just 5 days total. But yeah, you have to trade for 5 days. What I prefer to do with the take profit ones, just my truth is I prefer to, I mean, you guys know my theory on the tests, right? I prefer to take the highest amount of risk in the first couple of days so that if I blow it, the opportunity cost with time investment wasn't a lot. What I wouldn't want to do is trade those really small 1, 2, 3, 4 days, and then on the 5th day you trade big, or the 4th and 5th day you trade big, and then you blow it and you spent 5 days on a thing that you didn't even end up passing. That's, I mean, you have to kind of pick a day to trade a little bit bigger, I mean, really, right? So at least 2 days in the take profit ones, because you can't make more than 50% in 1 day. So I try to get 50% day 1, 50% day 2. If I didn't, then day 3, day 4, but I usually end up just flipping the last couple of days with 1 micro and then you pass. All right, this market here looks to me like we may end up entering a little descending channel, but if you look here at the bigger look, there's still an argument for a more zoomed out ascending channel on the 5-minute chart. So we got to see which argument ends up winning here. Yeah, Northwest, if you're gonna go a little higher risk on day 1 or day 2 with take profit, you got to make sure, or at least try not to break the 50% rule. So usually for me, I'm not just like gambling massive size to get 50% in one trade, and especially on take profit. I wouldn't do that, not even really on Apex. But after a few trades, if you're at 50%, you hang it up for the day, come back tomorrow. You don't want to like make on 150K take profit eval, you don't want to make 9,000 in 1 day because you broke the 50% rule. Yeah, I just had this conversation in the car with my wife. Sometimes when I'm high energy, I like to go on big market rants, big trading rants. She loves it. No, she likes to listen and hear about it all. But I was just having this conversation that, it's so interesting because options really were developed to be a more complex tool than futures. Because you can use options in so many ways. They are a more complex tool. They have all the Greeks. But futures, as far as day trading and hedging, they are a beautifully designed, simple trading product. And I didn't trade futures for quite a long time. I never had anything against futures. I just never dipped my toe in this world. But I mean, you quickly realize they're just so well designed as a day trading tool. That's really what they were kind of built for, and hedging. And the market is so deep, you really don't have to worry too much about liquidity. At least not compared to like a small cap stock. All right, well, ATR is now at 21, so it's dipping a little bit. If we can get a nice clean close out of this bull bar, I am interested in getting long. See if we can swing out this top and hold the overarching 5-minute little ascending level. We're not really at the 50% retracement level yet, by the way. So I'm interested here. But there's some stops above that curl up there. Maybe not a ton, but it's been around long enough that there's going to be some accumulated. Bear's trying to wick this baby on back. Let's see if the bulls can get back up, close this thing near the high. Got 15 seconds to do it. This is also the rollover of the 5 minutes, so I'd really like that to happen. They can't do it. See that 2 minute? Bull bar closing pretty much below the midpoint. All right, I will be back in 2 minutes. Alright, baby, we are back. Look at that big old bear bar. Alright, I'm going to get a stop limit sell ready in case we get a nice clean close near the low here. And I will place that, see if we can get a follow through to the downside. I'll leave that stop limit sell out for about 15 more seconds, see if we can get a fill. No fill yet. There we go. And we are in there, so I'm now sitting short. Okay, average price is 436 and a quarter. We are 10 points in the money already here on the trade. Let's see if we can get some better follow through. Stop I have up at 476 and a quarter. And my take profit right now is at 396 and a quarter. So we will manage on the fly if needed because ATR is at 23 and a half. All right. Now you look at the 2 minute and the 5 minute. We'll see if does this turn into a descending channel, or are we able to get a little bit of continuation because we're still well within what I would call kind of the current range, which I would really call like this. Okay, here if we look at the 5 minute, all this the current range. I'd be taking profit before the tests of the downside break, by the way, if we can get a push. This is such a calm little descending resistance with a more aggressive descending support. It would. I mean, nothing at this point surprises me, but I'll say it would surprise me if we saw a big push and another retest and then a rejection here, just because it's so calm on a day like today. It's not very descending at all. So let's see if the bears can give us a little bit of follow through to the downside. Well, back to green on the trade. It's got a headline here. Trump administration asks appeals court to pause tariff ruling. ATR, by the way, is just below 24. It's at about 23.8, which is, that's fine. That's fine. If that does continue to fall, I'd be open to managing early here, but right now I don't have a reason to. So I don't want to. Chris, the vibe song to save the day. For a while, I was meaning to remove this one. At this point, it's just become a meme, so I'm leaving it. U.S. says we may ask the Supreme Court on Friday to keep tariffs intact. Tubed out. How's everyone's week going? Good, brother. Appreciate you asking. Yeah, so we're kind of sideways here. I mean, look, the reality is here, when you get big surprise pushes like this, to both sides, it's very common, even if you get sideways, to get a second leg, right? That's what my bet is on. You know, I took the continuation setup, and now the second leg is very common. But it's a question of, you know, it's like you can be right and wrong making the same decision depending on how you manage. So right now the question is just, hey, you know, do we get stopped before that comes, or do we end up doing the lower probability thing, which is reverse without a second leg after a surprise like this? So we're kind of hovering around break even on the trade, back and forth. All right, Bears, come on now. Let's see what we can do. Take out that little bottom. Give us a little bit of a push. Lower. Nice little second leg would be very nice. Well, about 5 points in the money, 7 points in the money on the trade. This little bottom. We gotta see that break. By the way, here's the look of the trade. That's how I'm sitting. I like the structure of it. Gotta see some follow through. I don't mind if it takes its time, or always nice when it happens a little quicker though. There's the open P&L. I'll leave that up while we're in here. Well, just a few points in the money here, right around break even. All right, Bears, step in and do it the probabilities. Yeah, it's never going to be, 90% probability, because like we talked about with the options conversation, someone had to, well, I sold, right? The rollover back quite a few now, 2-minute bars back. I had to sell them to someone buying, right? So there wouldn't be buyers if the probability was like 97%. And I think that's where a lot of people kind of go wrong. Like they think like they're looking for 99% probability trades. You're not. You're looking for things that just have a slightly good probability that provides edge. That's it. So each trade, assuming, just make the numbers easy. Obviously, it shifts depending on what your reward to risk is. But let's assume that you're running a 1-to-1 reward to risk to make the numbers simple. Every trade is a slightly weighted coin flip. Okay, but it's weighted. That's the edge. So my stop's at 21,476 and a quarter. Bulls are trying to take out that previous bull bar's wick high. Come on, Bears, do the thing. Break even on the trade here. Bit of a push. We're gonna need quite a bit more than that. Come on now. See if we can take out that little previous low. All right, good. Good, I'll take that. Yeah, let's see if we can take out 400. There we go. Out there for a winner. Beautiful. What a nice little push. See that second leg? It's not going to happen every time, but the probability says that's more likely than the push up. It's just a matter of can you avoid the stop before that comes. So, good. So that is... We started the day on a loser. That's a winner, but we got good fills on that trade with that nice hard push. So that's essentially break even, but we're technically like 300 bucks in the green, 290. But it's break even, man. Let's see what else we can find. It's been interesting lately. My trading in the morning has been like okay. The afternoon though has just been beautiful, which is it's usually backwards, usually the other way around. But keep chugging, see what else we can find here. Look at that push, man. That's a beautiful move. Anyone else catch that? Curious if any of you guys caught that big. Just maybe you're still in it. Bruce caught it. Faba still in, man. What a beauty. Yeah, cool. Caught it. Baba out now. Nice catch, guys. Good work. Good work. You know, it takes a special kind of trader, a special kind of human being, first of all, to want to be a trader. I know it's hard to believe. This isn't for everybody. It's a tough thing. you have to be a little weird as far as your psychological control. I think you have to be a special kind of individual, which all of you here likely are. But you know, it's to hold through this. When you guys saw the open P&L, like I just don't care. You know what I mean? Like it's one trade, it's one cog in the wheel. Obviously it's nice to win trades, like it's good, like you want to win, but you know that as the weeks go on, as the months go on, you do the right thing. The right thing there was to hold through this chop. The right thing was not to, you know, close it early because, oh man, I don't want this to be a loser. We went maybe 25 points in the red at one point, and then got a 40-point winner out of it. Look at this push, man. But, I mean, listen, if you care too much, there's two things you can do. I get it. Like, it's weird to say, well, you don't care. Like, this is your livelihood. You got to make money. Yeah, but, like, I care about the end result, not each individual trade. If you find yourself caring too much about each individual trade, there's two things you can do. And I'm not just going to say, suck it up, because that's not real. It helps, but that's not, like, the right answer. Trade more. Good setups, ideally. Try not to miss any. And trade smaller. Trade so small that you actually are like, okay, I just don't care anymore because I'm trading so small. That breaks the ice. That helps you handle those swings, and you create kind of like an emotional barrier where it's like, okay, I've been here so many times, it just doesn't matter. Right? Like, I would imagine like a singer getting on stage the first time is probably tough. When you've done it 2,000 nights, it's kind of like, well, is the 2001st night really that big of a deal? Not really. I've been doing better since switching to 1 micro, less anxiety. Exactly. You don't care. That's a good thing. You care enough to try to put on good trades, but you put it on, you're like, okay, my job's done. You just don't care about the P&L swings. When you're trading 10 minis, you really care. And that's not great in the early days. You're gonna make bad decisions when you care too much. Scooby, I'm a welder by trade. I've caught myself on fire multiple times. I'm definitely in the right mindset for this. There you go, man. Yeah, listen, guys, especially if you're scaling horizontally, there's so much money to be made in just trading micros. Like, obviously, like right now, we're trading prop because it's such a great opportunity, but who knows what we'll be doing in, 10, 20, 30, 40, 50 years. All of us here are probably going to live longer than we expect with the way that artificial intelligence application is going toward in the world of medicine. We're probably all going to live a bit longer than we expect to live. So you have a lot of time to scale this and make little changes here and there. You don't need to think. I mean, as far as investing, it's like, yeah, it's great to think 50 years out. But like, as far as trading, what's the opportunity right now? Take it. You don't need to think, well, am I going to trade, these accounts 20 years from now? Who cares? Who cares? Do the right thing right now. And eventually, maybe you'll find yourself trading a personal account with 250 minis. Who knows? All right, so bulls trying to reverse this baby back upside. Let's see if they can. Now, again, we're in... The 5-minute actually shows it best. Here's the 5. We're in an overarching bear trend, but this is not like a hardcore sell to close trend day. This is, I would say, like a rangy bear trend. Okay, the bulls are seeing some success. The bulls have been able to make money. And I mean, there's another thing you should ask yourself, like, hey, how easy is it? Like, for example, if we're seeing this big push, and you're like, okay, I'm gonna buy right here. I'm gonna buy this dip. You should ask yourself, looking back, like, well, markets, you know, there's inertia. It's a real thing. So how easy has it been for the bulls to make money? Oh, it's been a hell of a time. They've not been doing very well. Should I really be buying here? Probably not. And then you get more and more confidence as this kind of thing starts to happen. Good work, Chris. 1.5 R on the day. Good work, brother. Yeah, listen, Pat, if you're taking a directional trade, it's really easy. The easiest thing to think of is, hey, markets have inertia. Does what I'm doing make sense? Have limit order bulls been able to make any money today? At least within reason. No, they've had a really bad day so far. Well, maybe I shouldn't be a limit order bull then. Makes sense, right? I appreciate the kind words, Javaz. Good to have you. All right, guys. Well, I'll tell you what. So, again, rangy bear trend day so far. We'll see if we get a reversal into the afternoon. Otherwise, stay as dumb as you possibly can until the market has shown you, hey, you are clearly wrong. Stay dumb. That doesn't mean, like, just continue to average in, right? If you're losing, that's not what I mean. What I mean is, as far as your outlook on the day and the decision-making process and the kind of trades you're taking, do what the market has been telling you to do all day. Okay? Should you be taking a bet that the bulls are going to swing it back up to 22,000, or I guess up to 22,000? Well, you know, maybe they do. And you'd make a lot of money. But the probabilities say that's probably not going to happen. And if it does, it's a very low probability event. So, stay dumb. Do what the market's been telling you. Markets tend to continue to do somewhat similar things to what they've been doing. All right, guys. So, hey, reminder, if you want daily payouts, Take Profit Trader, 30% off, and waive the activation fee. Save you well over $100 when you pass if you use code BIG, B-I-G. It's a hell of a deal, but also a very good deal right now. Extended. This was supposed to end last night. Apex is still 90% off, and you can pass the eval in 1 day. So technically speaking, you could be funded tomorrow if you traded the eval this afternoon. You don't have to. You don't have to pass in 1 day, but you can, which is a nice possibility to have. All right, guys. Appreciate you hanging out. I will be back tomorrow morning, 8:15 a.m. Central Time. If you haven't done so yet, please subscribe to the channel. Leave a like on the stream on your way out. That way it'll pop up for you tomorrow morning. Make your life easy. Stay patient and hit it hard when it's time. All right, guys. Have a good one. See you tomorrow.